Stock market news does not often grab the spotlight, but it does when something crazy is happening.
GameStop? More like game don't stop buying our stock.
A group of guys on Reddit figured out a way to get rich off GameStop while bankrupting a bunch of hedge funds.
GameStop's stock is surging.
The GameStop short squeeze might have been the most insane stock movement since the 2008 financial crisis. It's been described as a battle between retail investors and Wall Street professionals, or even a three-way battle with third parties like Robinhood, though it was widely considered to side with Wall Street. But who was manipulating GameStop's price? Starting at the end of January, a bunch of individual traders on social media platforms went up against experienced Wall Street professionals. And they made it. The Reddit traders pushed the GameStop's price up over 400% in a week. This made hedge funds who had wanted to short the stock quit the game with huge losses, and ordinary people were happy to see it. I mean, how exciting it is to see the wolf of Wall Street become a homeless sheep. Such revenge. But hold on a second. If you think the little guys beat the big bad short sellers, the logic behind it should be like this. First, individual investors kept buying and buying to make the market hungry. And that's exactly what these guys were pushing for on their Reddit posts. Never sell until the price hits $1,000. At the same time, they were the driving force of the game, meaning their money power was huge enough to manipulate the stocks. But the data doesn't really prove the logic, and things were actually much less clear. Take a look at this chart. This is the retail flow of Citadel securities in the week of GameStop's boom. Since many retail brokerages, including Robinhood, route a lot of their orders through Citadel, we can use this to analyze US stocks retail trade. So in that week, GameStop's price climbed from Monday to Thursday. Logically, you expect to see higher retail buying than retail selling. However, retail investors were net buyers only on Monday. This means retail investors bought more than they sold that day. From Tuesday to Thursday, retail selling exceeded retail buying, and this was although GameStop's stock price was still rising. Overall, the retail orders were quite balanced over those few days, so it doesn't seem to have been a pump and dump. Some market analysts have argued that while Reddit investors started the GameStop rally, they didn't have the money to push the stock price that high, and professionals came into play on both sides of the trade.
You talk about 70, 80 million shares traded yesterday alone. They're not out there able to trade that much stock in one day. That's institutional money.
The chart says it all. The market share of individual traders was 29.4% when the stocks were surging. Well, according to Citadel, retail traders had already put a lot more money into the market following the pandemic. So closing to 30% wasn't a surprising number, and apparently not enough to conclude that this was a battle between retail traders and Wall Street. And now, GameStop's stock price is returning to what it was, and regulators are looking into what happened. It seems the game is nearly over, but not quite yet. Nobody can say who was the winner, or maybe there was no winner in the first place. That's all for today. Thanks for watching, and stay tuned for more Factstyle episodes.